Welcome back. You're watching Taking Stock, and we are talking to our guest Sanjay Dutt of Quantum Securities and Jay Wala of 1857 Advisors. Jay, which are the stocks, 3 or 4 stocks that you think would be the catalyst for the Nifty to go back towards that 7700 bottom, or maybe even lower if you think even 7593 or something like that is possible?
Yeah, I wouldn't exactly bet on going negative on the market at this point of time. It's pretty late to get bearish on the market. I would rather look at the markets in the other way and say, which are the stocks that are likely to bottom around the 7590 mark and resume the longer term uptrend. If I address that question, I think I'm looking at something like Idea Cellular. I think 130, 140 levels that it went through last week is pretty important. And we had identified Bosch in May and June as a top pick, and that continues to be a top pick. And I think the stock has gone through a good correction after going from 19,600 to 26,700. The drop is ideal, and it's a very good entry point. I would look at that as another stock that you can keep focus on. And there are other stocks within the CNX MNC space. Bosch is the top pick though. If you look at in early July, we identified tire stocks as a very good sector. Most of the stocks are still up 40-50% even now from the levels that we had identified. But my take here is that they still have further upsides to go. But I think one must use that upside to liquidate investment positions, not just trading positions, investment positions. I think this is going to be the final leg up for the tire stocks. Once that leg is done, I think they're going to see a very large correction come through for the entire sector. Okay, that point is taken. Sanjay, the sector that's seen quite a bit of correction after the kind of euphoria that preceded that because of that Indradhanush scheme and a couple of other announcements was the PSU banks. What's the call here? Valuation-wise, maybe this is still the cheapest sector, but still a lot of problems. How would you approach this particular space?
Anuj, from a short-term perspective, investment or trading, people should avoid, in the sense, not really come into this sector. But if someone has got a longer-term view on the sector, this would continue to be my top pick. And I wouldn't be surprised even in the short term, he or the person investing may make money. The point is that, the uncertain times, how much time they're going to take, whether government, action that they've announced in Indradhanush, there wasn't really, that much of really specific stuff that came out in Indradhanush, but government is working on a lot of things to work on the NPA front. The RBI governor is really spending a lot of time on it, we know. But eventually, I'm very clear that in a year or year and a half from now, these stocks are going to be definitely at much higher levels and actually going to outperform, no doubt about it. But the question here is that whether in the short term, how much more pain we see is something one has to live with. But I think somewhere what we saw this week, I don't think those lower than those levels would we see the PSU banking stocks go, because they're more or less discounting everything that's negative in the sector and negative in stock specific problems that are there for the PSU banks. Those will all be discounted at those low prices that we saw.
Here on, Sanjay, everyone is expecting a rate cut to come in before the September 29th policy. But how much of a positive trigger do you think that could be? Are we just, clinging on hope here? Or do you think that even if we get a 25 basis points, or some people are even talking about a 50 basis points rate cut, if that comes through, do you think it could be a durable positive trigger?
See, firstly, I don't think a rate cut would come through before the policy. I have my doubts on that, and more so hearing what the RBI governor had to say in the RBI report that came out, reading from that. But even if it came out, I'm a firm believer, and I'm very clear on this, it won't really have much of a positive impact, what you just said. It'll just be temporary, a day or two's uptake, and we are back in business. Because there are bigger problems that the banks are having to deal with, and you can clearly make out the fact that the RBI governor has been harping on the point that transmission is not happening. Banks can cut rate, but banks are not doing it because banks have got bigger problems to deal with in terms of their portfolios. So, to cut a long story short, if we did cut rates before the policy, it would be just a day or two's positive trigger for the banking stocks, for the sector to re-rate a little bit, but nothing more than that. And I would basically still maintain that the rate cut will not come before the policy, if it does come.
Okay, Jay, a word on some of these global factors. Crude had a big bounce on Thursday night. So what's your call on that? And what's the call on Indian currency if you're tracking that? Because that has ramifications for equity markets.
Yeah, if you recall, our call on crude in the middle of May, when it had hit 69, we said it will go to mid-30s. And NYMEX has come to that level, and Brent is almost there. But on Friday we saw a 10% rally. So on Thursday we saw a 10% rally come through for both the NYMEX and Brent. I think this is just a relief rally. Once again, I think there's one final low again left for Brent and NYMEX to come through. But on a longer term, it's going to be making a very significant bottom for NYMEX and Brent. But we want that lows to be tested one more time, or slightly below that low once again. Coming to the rupee, if you recall from our December conversation when we were in the middle of the Russia crisis, I had said, when you were asking one of the currency specialists that when they had refused to take a call on the rupee, I said the rupee is heading to record lows once again, and it's come to 67 so far. I think from a short-term perspective, there is a corrective decline, or rather the strengthening process due for the rupee. I don't think it's going to take out the all-time high straight away. But once that correction is done, we're looking at record lows closer to 74, 76 for the Indian rupee. But that's going to be in a medium-term time frame. This is exactly what I said in December too. So there's no change in view from that angle.
Okay, but just suppose we do see this bounce back continue into trade on Monday, Jay, what are the stocks that you would recommend one can go long into just for a positional and intra-week call?
Yeah, I still like Cipla. Cipla is looking quite attractive. I think we still hold the view that we have a price objective of about 800 plus for Cipla. I think that's likely to happen. So it could very well perform well the following week. And if you look at something like Century Textiles, the low between 500 and 470 is very crucial. And I think that's a stock that could perform well in the week going forward. But please remember, the market, stocks and securities, they turn around in a three-step fashion. One, they come to a significant low, and then they stabilize and clock a reversal. Or they could skip the middle step and just come to the low and reverse. Until the reversal signature is present in the stock, we don't want to venture in and pull the trigger. The market is very close to an important bottom, but we don't want to venture out until the market itself is saying that the market has stabilized and it's going higher. We want to be playing safe and take that extra premium as insurance.
Okay, Sanjay, final question then. What is the bigger risk to this market? Is the bigger risk still global in nature, or is there some domestic risk lurking around the corner? Maybe Bihar election, maybe something else. What would you ascribe as the bigger risk to this market?
I think the bigger risk is from outside India. That's the global factors, but those have also played out to quite an extent. What we saw has been part of that bigger risk that's played out. In fact, if you look at US, you look at Europe, things are a little more stable there. If you look at the latest growth forecasts that came out of Moody's, they're talking about closer to 3% odd growth for the world, nothing lower than that. We should be doing about 7% odd. I think in worst case situation, everything collapses across the world, we would still easily manage a 6% growth because we are domestically quite strong. Coming to Bihar elections and those kind of things, there are temporary setbacks for the government, but they're not going to really move our Prime Minister from the resolve and the team they've resolved to sort out things. Irrespective, in fact, what I'm finding is that this current market crisis, all the policy makers here, the government, the finance minister, the Prime Minister, whatever I'm hearing in Delhi, they're actually becoming more conscious and more aggressive to sort out problems. You've seen this noise about smart cities. Yes, a long-term thing will come out later. You've seen this noise about special session for GST. They're becoming more conscious of the fact. And if, God forbid, they don't do well in Bihar elections, I'm very confident that they're going to go overdrive and try to sort problems of the, linked to the economy, growth, equity amongst, all citizens in terms of opportunities. So whatever I think there is primarily going to affect us from outside the country in terms of, whether it's the US rate increases or growth abroad or China collapsing further or whatever that may be. So I don't see anything really from domestic whatever I see from domestic is going to be probably positive.
Oh yes, that's a fair point. That's actually the only piece of the puzzle that's working in our favor, the domestic improvement that we're seeing. But Sanjay, Jay, thanks so much for joining us. You guys have a good weekend. We'll speak with you again in a bit. But that's all the time we have on this edition of Taking Stock. We leave you with some more market opinion that we got through the week. Anuj and me will see you again on Monday.
I would think that shorter term return expectations should be muted, and probably it can have, maybe a few percentage point fall for some time, and maybe, but I think 12 to 18 months outlook is actually becoming better because the base is lower, clearly 10% lower.
When you get mega returns in equity, it doesn't look likely. I believe that you can get decent returns in equity. To get mega returns in equity, you need GST, land bill, sharp cuts in interest rates, resolution of the infrastructure bad debt problem, improvement in the real estate markets. I think all these things happen, you can get very good returns, but otherwise you should prepare yourself to invest today with a decent return possibility.